We have seen global markets tumble in trade right after Donald Trump's tariffs, the US tariffs coming into effect, 25% tariffs on Mexico and Canada. We did, of course, hear of Canada saying that retaliatory tariffs will take place. And, of course, China saying that, look, countermeasures will be implemented. So investors rattled by a full-blown trade war, as it were. Of course, what this means for India's markets, we will be discussing with Ajay Bagga, who is joining us, a senior market expert. Ajay Bagga, we saw Nifty and the Sensex, India's benchmark indices, open at their lowest level since June 2024. So India clearly not insulated from, of course, this tariff impact that the world is facing.
Yeah, definitely. Domestically, I think the issues are getting better for India, especially after the December GDP print came in quite good at 6.2, and the last 2 years GDP, Sakshi, was revised upwards, and the September quarter GDP print was also revised upwards. So we had some good news on the economy. I think the corporate earnings have bottomed out in the December quarter, and from here on, the base effect takes off, and we see better earnings year on year in India. So domestic issues are getting addressed quite well, but it's the global overhang which is spoiling the sentiment for the Indian markets and leading to sell-off from the FPIs.
Right, but Mr. Bagga, we have seen persistent FI selling, and for those saying that, okay, look, how can we have FIs return to India, what would you suggest?
I think we'll have to wait for the corporate earnings to make a turn. I think the bottom has reached in December. Around June, when the earnings come out in mid-July onwards, you will see that there is some amount of good green shoots happening on the corporate earnings. And in anticipation of that, around May, you could see FPIs returning. Sakshi, the good news is in February, the intensity of selling has reduced. So the fall in February has been on very low daily volumes. So as against, say, 1.5 lakh crores of daily volumes, we have seen 70,000 odd crores of daily volumes. And FPI selling intensity also reduced. Though it is negative still, it is hurting the market sentiment and market momentum, but the intensity is reducing. All of this is pointing towards an imminent bottom formation in the markets.
All right, but when the tariff talk had just begun, we spoke about how US President Donald Trump is looking at shocking everyone, then looking at negotiations, and then looking at deals. Now with Commerce Minister Piyush Goyal in Washington, do you see deals taking place? Do you see India's impact then being restrained?
Yeah, I think if you look at it, Israel has got a deal, UK has got a deal. Starmer was there and he walked off with no tariffs. Mr. Modi was there and we got a reprieve. And I'm sure behind the scenes there will be something going on. And we won't see much of tariffs on April 2nd. India has been giving concessions and more concessions will be given. So we don't foresee much of an issue for India. We have to protect our IT services, which again, services you can't really put tariffs on. So hopefully we'll get away with it. Mexico, Canada face a lot bigger issue, and Mexico has emerged as the biggest trade partner of the US post Trump tariff 1 of 2018 onwards, and which Biden carried forward. So a lot of nearshoring happened in Mexico. So today, Mexico, Vietnam have become the biggest trade partners, and they will face much bigger issues with any potential Trump tariffs.
Absolutely, but with the Nifty falling 16% from the September 2024 peak, with, of course, India also facing the impact, your thoughts really on how this will pan out going forward for all those investors really who've lost significant money in the past few weeks and past few months, for them saying that, look, we have lost so much money now, what really lies ahead for India's stock markets?
See, again, I would say investors and especially the retail investors who really look to you for guidance, I would tell them that you have to relook at your asset allocation. So you must have fixed income, you must have gold, you must have other fixed return instruments in your portfolio apart from equity. What happened last 5 years, right from March 2020, bottom formation with the COVID, and then the a huge spike in the Nifty and Indian markets. What we saw was 5 years of very strong returns. Now we are seeing a mean reversion of sorts where we have seen a correction from all-time highs. It's still within a structural 2 decade, 3 decade story of India. We are still the strongest growth economy amongst major economies. So all those have not changed. Again, I would say last year was a more idiosyncratic year where 4 months the government was in a logjam because of the national elections until the budget came through. We didn't see the spending catch up. And Sakshi, if you look at September fiscal deficit, we were nearly 33% less year on year. Now, the catch up has happened so much so that by January, we have reached 9% year on year in terms of the fiscal deficit. So there has been a big catch up. If you look at capex, in December, we spent 91% more year on year because you had underspent for the first 8 months. In January, we spent 51% more year on year,
Right.
still less in terms of catching up. But RBI is addressing a lot of issues. Government has addressed a lot of issues. And come April, the momentum is now turning positive domestically. Now, these
Absolutely. So issues being
issues
addressed and the momentum is going to turn positive is what your thoughts are. Thank you so much for sharing your thoughts and decoding the market mood for our viewers.